Hey, future entrepreneurs, welcome back to the channel where we break down the complex stuff into easy-to-digest nuggets of wisdom. Today, we've got a super important topic that's going to save you tons of headaches down the road: how to fund your LLC. Specifically, we're diving into the differences between capital contributions and loans to your LLC. Now, I know what you're thinking. Isn't this just accountant talk? Well, don't worry, you're about to become a funding genius and we'll make it fun, I promise. So hit that like button, subscribe, and share this video with your friends. Trust me, they'll thank you later. Before we get into the nitty-gritty, let's quickly recap what an LLC actually is. It stands for Limited Liability Company, and it's a popular business structure because it gives you liability protection. You won't lose your personal assets and some tax flexibility, but whether you're just starting out or you've already launched your LLC, you're going to need money to get things rolling. And no, unfortunately, your good vibes and passion for the business aren't going to fund your LLC, unless, of course, you're operating a vibe consultancy. All right, let's start with capital contributions. A capital contribution is when you put money or assets into your LLC to help fund it. It's the money you, as the owner, contribute to the business to get things off the ground or to keep it running smoothly. Think of it like putting your money where your mouth is. You're showing your commitment to the business by giving it the funds it needs to grow. You can contribute cash, but you could also contribute assets like property, equipment, or intellectual property, things that can help the business succeed. Now, these contributions don't get paid back. They're yours to grow and invest in the LLC. Essentially, it's like the LLC is your baby, and you're giving it the nourishment it needs to grow. So why would you choose to make a capital contribution? Well, let's break it down. Ownership. Your contribution increases your stake in the company. The more you contribute, the bigger your slice of the pie. No repayment. Once the contribution is made, there's no pressure to pay it back, which means less stress. Flexibility in taxes. The LLC doesn't treat capital contributions as taxable income. Instead, you'll likely see this reflected in your equity. So, in other words, you're just being a good parent to your LLC. No loans, no repayment plans, just straight up good vibes and funding. But of course, nothing in life is ever completely perfect, and capital contributions come with a few downsides. Equity dilution. If you're bringing in other investors, you could be diluting your own equity in the company, meaning you might have to share a larger portion of the business. No immediate returns. You won't get your contribution back unless the LLC liquidates or distributes profits. So it's a bit of a gamble if the business doesn't take off. Basically, if you invest in your LLC with capital contributions, you've got to think of it like planting a tree. You're nurturing it for the long haul. You don't get to harvest the fruit until later. All right, so now let's talk about the second option. Loans to your LLC. A loan is just what it sounds like. You, as the owner, loan the LLC money, and unlike a capital contribution, this loan needs to be repaid with interest. Think of it like lending money to your friend, but this time, your friend is a business. You'll agree on the amount, the repayment terms, and the interest rate. Then, just like any loan, the business will pay you back, usually through monthly payments. So why would you want to lend money to your LLC rather than make a capital contribution? Well, there are some definite advantages. Repayment. Since the LLC has to pay you back, you're not taking as much of a risk as you would with a capital contribution. You could also set the terms to be favorable to you. Interest. You can charge interest on the loan, which means you get paid for taking the risk of lending money to your LLC. No equity dilution. The great thing about loans is you don't lose any ownership in your LLC. Your stake in the business stays the same. So instead of planting a tree, you're essentially leasing the land to the LLC, but you're charging it rent and making sure it's going to pay you back. However, just like with capital contributions, loans come with their own challenges. Repayment obligations. The LLC has to pay back the loan, whether it's making money or not. This could put financial pressure on the business, especially if cash flow is tight. Interest rates. The IRS requires loans to be charged an interest rate that's at least equal to the applicable federal rate, AFR. So you can't just give your LLC a loan with 0% interest. Sorry. Tax implications. While you can deduct the interest on the loan, the LLC has to treat it as a liability, which might affect your tax situation differently than a capital contribution would. So, lending money to your LLC? It's kind of like being the bank. You get interest, but the business better not default or miss a payment, or it's your problem. Okay, so now we're at the fun part. How do you decide between a capital contribution and a loan? Well, there are a few things to consider. Risk tolerance. If you're okay with a little more risk and want to keep your ownership, go with a capital contribution, but if you want the safety net of being repaid, a loan might be better. Control. If you want to maintain control and don't want to give up any equity in your LLC, loans are the way to go. Cash flow. If the LLC doesn't have strong cash flow right now, a capital contribution could be a better option because the business doesn't have to worry about paying you back immediately. Tax considerations. Loans might have different tax consequences than capital contributions, so talk to a tax professional to figure out the best option for your situation. So now that you know the differences between capital contributions and loans to your LLC, it's time to make an educated decision about how you want to fund your business. Remember, there's no one-size-fits-all answer, but whether you go with capital contributions or loans, you're now armed with the knowledge to make the best decision for your LLC. If this video helped you out, smash that like button and don't forget to subscribe for more insightful videos on all things business. And hey, if you know someone starting an LLC or considering funding options, share this video with them. They'll thank you for it. All right, business gurus, I'll catch you in the next one. Until then, keep your LLC funded and your entrepreneurial dreams alive. See you soon.